Good afternoon, everyone. Welcome to our eighth session of our CRCR training. I can't believe we're actually already on 8 of 9. So we're going through our last unit today. We'll give everybody a few more minutes to get on. Reminder that we are recording this. So we're going to ask you to stay on stay on mute and off video for now. If you do have any questions as we go through the sections, please put those questions in the chat. Anthony is going to monitor that for us. We'll bring those up at the end, and then we'll answer questions, and then certainly feel free to join us live, ask any questions live if you want to join us via audio and video at that point in time. Reminder, these are all available on the Florida HFMA YouTube channel. So feel free to go out there, and as you prepare to take the exam, go out and listen to those and then follow along with the e-learning as well. Okay, I think we should get started. We've got a lot of stuff to go through today. So what we're going to be reviewing, now my computer doesn't want to move, it seems to do this every time. We're going to start working through the last 4 sections of this section. We're going to talk about the 501R policies, patient debt regulations, the utilization of collection agencies, and the use of outsourcing in the revenue cycle. So the ACA legislation lays out requirements for community health needs assessments, policies related, I skipped a slide. We're going to review 501R today. We're going to recognize the requirements, billing and collection activities for tax-exempt providers, and then the requirements for financial assistance policies and some key elements. So the Affordable Care Act, which we've heard a great deal about, obviously, lays out requirements for community health needs assessments, policies related to financial assistance, emergency medical care, or EMTALA requirements, and billing and collection activities. These regulations must be met by all hospitals legally designated as not-for-profit under the IRS Code 501(3) regulations. One objective of the ACA is to promote the transparency of a hospital's community health needs assessment and needs and financial assistance policies, and to provide protections to FAP eligible patients with respect to charges and collections. The required community health needs assessment is typically handled within a planning or community development area of the provider. The purpose is to identify significant health needs, prioritize those needs, and identify resources available to address them. The report must be widely available to the community. Financial assistance policies, we're going to dig into a little bit deeper on the next few slides. Compliance with Section 501R requirements is required in exchange for the federal tax exemption. These requirements are a cost of doing business. Well, how do the 501R regulations requirements impact revenue cycle? Because these regulations focus on identifying potentially eligible patients, providers must pursue financial conversations as early as possible opportunities. Pre-service is the most desirable, but no later than time of service. On the back end, promptly and accurately processing the applications, putting in controls to not bill FAP eligible patients' total charges, nor are they subjected to extraordinary collection activity, which we will also dive deeper into in the next few slides. So certainly there needs to be a compliance portion of this. You must have a comprehensive plan along the lines suggested by the OIG, indicating that an organization is serious about being compliant with regulations and may serve to keep the federal government from dictating a plan for it. It will also insulate the hospital from violations of false claims, fraud, and abuse regulations. So the key elements that are required in a financial assistance policy are the eligibility criteria, which must be met for each type and level of financial assistance, including any discounts offered. Do they use any other sources like credit history or presumptive charity scoring to determine it? How do they actually go about applying? Is it online? What documents are needed? Where can they get assistance to complete? Will that be your financial counselors? Is that staff on the back end? A listing of all providers specifying who is covered by the FAP and who is not. This is not whether they are in network or not, but if they are covered under your FAP. For example, does it cover employed physicians? Do your community physicians accept it? If you use hospitalists or outside ED docs, are those bills covered? Again, even if they are not in network with your insurance. Notice that patients will not be billed more than AGB, or the notice of amount generally billed, that they will not be billed total gross charges, and the methodology that used to determine the AGB. Is it the look back method or the prospective Medicare Medicaid method? A lot of hospitals got into a great deal of issues a few years ago due to the fact that they were discounting commercial insurances, but not discounting patients. So it needs as to why you now probably have self-pay discounts at your organization. What actions the hospital may take in the case of non-payment, and if extraordinary actions will be taken at that point in time. So what are extraordinary collection activities? Examples of what constitutes reasonable efforts must be undertaken prior to initiating any ACE. You must widely publicize your FAP availability. You must wait 120 days before initiating any ECA. Provide in written notification about FAP, notification on incomplete application and how to complete and how to get assistance. Allow potentially FAP eligible individuals to submit applications for at least 240 days from the start of the first post-discharge billing statement. Anyone submitting a FAP application within the 240-day application period receives special protection from additional collection activities. These protections include provider required to suspend any ECA already underway, must review and provide an eligibility determination in writing. If not covered 100%, must provide a billing statement indication the amount owed and how it was calculated. And if any payments were made by the patient, they must be refunded. If any ECAs have already been initiated, like credit reporting, then those must be removed. So the key points that we talked about briefly is the ACA laying out those requirements for your community health needs assessments, your policies. All hospitals that are considered nonprofit under the IRS Code 501c3 regulations must be compliant with all of these to remain tax exempt. Okay, and we should have our first polling question. Which option is not a required component of an FAP? So we'll give that a minute, or a few couple more seconds. Okay, Diane? Out-of-network providers, correct, right? All the other are required elements of a FAP. Okay. Now we're going to talk about patient debt regulations. There are 4 major titles of the Consumer Protection Credit Act that we'll review today. We'll talk about the 3 types of bankruptcy, and we'll talk about the TCPA that promotes protections under cell phone utilization. Okay. Granting credit involves adhering to strict requirements regarding how the credit is executed, what is communicated, and how the payments and principals are reported. Several regulations apply not only to the bank and finance world, but also to healthcare. The CCPA has several components. The Truth in Lending Act establishes disclosure for consumer credit sales and consumer loans. Specifically, Regulation Z's disclosure requirements apply to hospitals if all of the 5 points are met. A collector enters into a written agreement with the debtor regarding payment. The account is related to credit extended for personal, family, or household purposes. During preceding or current calendar year, the collector has entered into agreements, written or otherwise, with debtors involving the addition of interest or finance charges, not typically in healthcare, but payments are to be made in more than 4 installments. Agreement is not related to a court proceeding, and we'll discuss disclosure requirements on another slide. A garnishment is a legal proceeding whereby money or property due or belonging to a debtor is applied to the debt of the plaintiff. Title III establishes maximum limits. No more than 25% of a worker's disposable income, but that could certainly hurt, couldn't it? The amount by which a worker's weekly wage exceeds 30 times the federal minimum wage, and also employees cannot be fired due to garnishments. Title VI protects consumers' rights and has exact standards that limits the use of consumer credit reports, covers the type of information that must be removed from credit files, and the timing. It also prescribes the procedures in case of a disputed accuracy. The agency must clearly and conspicuously disclose to the consumer his or her right to make such a request. The CFPB is an independent agency of the U.S. government and is responsible for consumer protection. The CFPB issues related to activity under the FDCPA, the mnemonics is crazy. They have been instrumental in persuading lenders to reduce the impact of medical debt on FICO scores. All 5 points of Regulation Z must apply to trigger the disclosure requirements. If any or several do not apply, no disclosures are required. If they are triggered, they must include the items listed on the slide. Failure to comply with the disclosure provisions may result in fines and restitution payments. Fair debt collection practices. So we're going to review a few of the sections that they cover. This only applies to third-party agencies, not agencies that are early out collecting on behalf of the hospital business office or yourself collecting on your own behalf. Early out vendors that you typically might use from day one of billing are part of your self-pay billing, typically that first 120 days that you must retain ownership of it. Outsourced vendors that actually are collecting on behalf of your business office are not considered third-party collection agencies. It is only when you get into that transfer to bad debt and they are now being a bad debt agency is when fair debt collection practices apply. Section 804 governs the action of debt collectors while attempting to identify an individual location, or rather skip tracing. Because skip tracing requires contact with third parties, individuals outside of the actual debtor, this section is especially strict. Basically, it covers any debt collector communicating with any person other than the consumer for the purpose of acquiring location information about the consumer, and clearly defines what they shall and shall not do. Section 805 covers ceasing communication and that the debt collectors must let the patient know when further efforts are being terminated, may invoke specified remedies, which are ordinarily invoked by such debt collectors or creditors. Where applicable, notify the consumer that the debt collector or creditor intends to invoke a specified remedy. Harassment is defined in Section 806 in terms of the 6 practices prohibited. A debt collector may not engage in any conduct the natural consequences of which is to harass, oppress, or abuse any person in connection with the collection of a debt. Examples include use of violence, obscene language, or causing a telephone to ring continuously with the intent to annoy, abuse, or harass. I certainly wouldn't want to use any of those debt collectors as a provider. Collector conduct violations are defined in Section 807. There are 16 deceptive or false representations that are prohibited. Examples include stating that they are an attorney when they are not, implications that non-payment will result in imprisonment, or the threat to take any action that cannot be legally taken. Okay. Bankruptcy. So the term bankruptcy is defined as the legal process by which a person, business, or corporation is declared to be insolvent or unable to pay creditors. The types of bankruptcy and their impact on the patient's financial responsibility are covered under the 1979 Bankruptcy Act. So the 3 different types of bankruptcies. So Chapter 7 is a court proceeding that liquidates the debtor's non-exempt property, pays creditors and discharges the debtor from his debt. They are almost all voluntarily initiated by the debtor by filing a petition with the federal district court. The debtor's wealth is irrelevant, as is the amount of his or her liabilities, as long as the debtor has debts. Exempt property includes real personal property, such as things like even mobile homes. Disability, illness, or unemployment income cannot be taken. Alimony, child support, and pensions are always also exempt. A Chapter 11 permits a debtor to work out a court-appointed, court-supervised plan, a reorg, using in the nature of reduction in debt, more time to pay the debt, or a receivership. Again, filed in federal district court. Creditors may either accept or reject, but is accepted when there is a major creditor approval. Courts confirm this only if it satisfies it's in the best interest of the creditors. Debtor will faithfully carry out the plan. Plan provides for payment to creditors in the order of priority, such as secured debtors like a mortgage, and creditors have accepted in a majority. I will give you an example of a debt reorg. I basically got a job for a provider, and my first day there, they told me they had filed for Chapter 11 bankruptcy. Didn't really know what Chapter 11 was at that point in time, but they did it so they could actually negotiate a cheaper lease on the rent. We were in the middle of 57th and 7th Street in New York City. And so they were looking to negotiate a lesser rent. But here I am thinking I just started a job. I'm going to be out of a job. So that is Chapter 11 is a debtor reorg. And debtor rehabilitation is a court proceeding that does not liquidate property nor discharge debt. Rather, it serves to reorganize a debtor's holding, example being a garnishment. Okay. 9 exceptions to discharges. You cannot discharge back taxes, debts from obtaining money under false pretenses, DWI debts, educational loans, or any prior bankruptcy. If it should have been included in a prior bankruptcy, you can include it again. Okay. The Telephone Consumer Protection Act. TCPA was intended to restrict auto dialer calls and automated telemarketers to consumer cell phones without the specific prior consent to consumer cell phones. Dialing the number using a standard telephone is not restricted, nor is leaving a message. Providers must have TCPA language built into their intake process. Adding TCPA consent provisions to admission forms is critical to ensure that all parties using the contact number have the patient's consent to do so. Failure to obtain proper consent may result in fines per call violation. So the TCPA rules, consumers have the right to invoke consent at any time. So if I gave it to you 2 months ago and you're now starting to call me using an auto dialer, I can remove that that consent at any point in time, and you must stop calling me. Callers will be required to cease calling recycled numbers. And then the definition of an auto dialer will be expanded to include equipment with potential future ability to dial random or sequential numbers. So this really can impact the capabilities that collection agencies, third-party vendors that you use, their ability to reach out to patients appropriately. So some key points, there are various federal acts to ensure that all debt, including healthcare debt, is treated fairly. We must be aware of the various acts discussed in this course, as revenue cycle processes must take things like bankruptcy into consideration as to what steps you take, what steps you must stop at any point in time. And then making sure that if you are outsourcing it, that your vendors are also appropriately following all of the appropriate ACA debt collection requirements out there. Okay, and now we've got another polling question: which option is not a bankruptcy type? Okay, Diane? Creditor priority, that is correct. Again, straight bankruptcy is number 7. Debtor reorganization is chapter 11, and debtor rehab is also a bankruptcy as well. So creditor priority is based on things like secured debt, like mortgages, and making sure that any money under chapter 7 are given to the priority of the creditors, that like secured creditors like mortgages. Okay. Moving on, we're going to talk about the utilization of collection agencies, how HFMA has put out some best practices in medical account resolution, particularly related to trying to collect self-paid debt. How do you evaluate a collection agency? The advantages and disadvantages of using a third-party collection agency, and then certainly using a law firm in medical accounts resolution. Okay. So you can see there's some various best practices that HFMA has put out there, and I think that most providers, particularly those that follow HFMA closely, which they should, try to follow these to the best of their capabilities. So successful account resolution begins with educating patients on their estimated financial responsibility, available payment options, and financial assistance programs. HFMA has put together a list of 8 best practices with an explanation for each one. All financial communication should be clear, concise, correct, and patient-friendly. All activities in pursuit of account resolution should be governed by the provider organization's financial assistance, account resolution, and collection policies, and should reflect the economic circumstances of your community. Key aspects must be standardized. One patient cannot be treated differently than another. ensuring reconciliation with business partners, ensuring both an early out vendor and a bad debt vendor are both not attempting to collect debt on the same account. Happens, unfortunately, all the time without proper reconciliation of vendor inventory. When choosing account methods, providers should always rely on community knowledge and sound business judgment. Methods can include phone calls, letters, data scoring, and third-party loans. Start the process on the first bill sent to the patient, and best practices in 501R regulations state it must be 120 days from the first bill date to bad debt placement. So there is an understandable and natural reluctance on the part of the providers to involve a third-party collection agency between themselves and their patients. The simple reality, however, is that some accounts will only be collected with the influence and tools of a collection agency. So ensuring that they represent the provider, they must include provisions to improve the quality of care. I think that's wrong. Yeah. And making sure that they're representing the provider appropriately. My apologies, my notes seem to be wrong on that slide. So the advantages of a collection agency: tools and technology that providers just simply cannot invest in. Things like dialer files, propensity to pay scoring, things like blast messaging. As a provider, you just can't manage, maintain, and implement those types of technologies moving forward. They probably will collect faster because they'll be aggressively pursuing your patients, well, appropriately aggressively pursuing your patients, but they'll certainly be making more attempts to collect that debt than you probably would as a provider. Documentation is critical for litigation should you get down to that point. They'll have better capabilities to document all of the activity should you have to go down to any type of legal action. They should provide feedback back to you. They should be absolutely recording every conversation with your clients and your patients to make sure that you're recording any complaints, etc. And then they can provide incentives to your patients to actually pay you. Okay. Evaluating a collection agency. There are various reasons why you should use, you should use a collection agency. One of them is not based on the types of presents or food that they send your staff during patient accounting week or during Christmas, or what dinner did they take you to, or did they take you golfing? All right, using a collection agency, although it should be relationship, you need to evaluate them a lot differently than that. So various factors must be carefully considered when selecting and contracting a collection agency. Remember, they are representing you when they're interacting with your patients. The communication with the collection agency and the providers, be it positive or negative, can have a significant impact on patient relations, result in patient complaints, and potentially result in that patient not returning to your facility again due to a negative experience they had with either you or a collection agency. They should be able to provide 3 to 5 references from other healthcare providers to support their reputation. I highly recommend you use somebody that either has a dedicated healthcare unit that really understands healthcare debt. It is different than trying to collect debt on some type of consumer thing. I went and bought a car and I'm not paying you. That's going to be a completely different conversation than healthcare debt. So either using an agency that only does healthcare or has a very dedicated unit that just does healthcare. They have to have the ability to sensitively deal with patients. Again, trying to solicit feedback from them. Again, not same debt as, if I went and got a mint coat. They should be able to provide patients with they should be able to provide you an estimate of collectability and fees should be done on a contingency basis. You need to address how to deal with payments made directly to the agency. Highly recommend you try to set it up that all payments come to you versus going to the agency. At a minimum, they must be able to provide you with the assignment reports and monthly collection reports, but certainly activity reports, broken payment plans, a lot of other reports probably talk about what are they doing? Are they meeting your SLAs? Probably should be implemented. And then understanding and agreeing on how to correctly calculate the recovery percentage, with the most common reporting is dollars recovered or amount collected against dollars assigned or placed. So managing collection agencies, what is the transfer process? How often are you doing it? Certainly making sure you have a dedicated vendor management person, a vendor liaison that handles all reconciliation, all invoice review, any communication with the vendors with respect to information that needs to go to a patient, or looking at a complaint or a dispute. Absolutely talking about a second placement, not just using one vendor. We highly recommend that you use more than one vendor, to really make sure that you have some kind of, comparison on results. One vendor, you're going to think they're doing great, but maybe if you had a second vendor, they may have some competition there, but you may see different results as well. Then placing to bad debt vendors, and then even a second placement vendor. And then certainly the use of a law firm. And that law firm may have the capabilities to, maybe they do have a arm of theirs that just does collection efforts. Not everybody that's making those phone calls are a law firm. But the ability to use a law firm also allows you to take those legal actions against your patients only after a certain period of time, and many attempts to collect that debt, negotiate that debt, get the patient into a reasonable payment plan is what we should be doing. But certainly use of a law firm allows you to not have to then place it to a law firm to go against any type of legal action. Okay, so key points, and again, agencies are going to have tools and technology that are effective in pursuing age self-pay accounts. That's why it is so common in the healthcare industry that many providers outsource their accounts from day one, because they cannot invest in those technology or those FTEs to appropriately pursue self-pay debt. They can do it faster. Oops, sorry. I keep my finger off that button. You do have to make sure you select the correct agency. It is similar to an affiliation with a business partner or the hiring of the vendor for any other specific services. So again, evaluating them based on reputation, performance, healthcare specific knowledge, and experience. And then again, not based on, what dinner they're going to take you out to, or they take you out to, football games, etc. Not the best reason to choose collection agency in this day and age. Okay. So next polling question. Which evaluation criteria demonstrates reputation expectations? Okay, Diane? It actually is the employment of staff who have experience in healthcare is the reputation that you're looking for. The amount of monies collected is going to be their performance and their collectability. Certainly, you do not want one that has a high turnover rate, because I wouldn't think that that would be a place that happy people are working. And typically, we don't see Yelp scores and consumer comments on collection agencies. You might see them out there, but I wouldn't use that necessarily as a reputation. Another evaluation criteria is reputation expectation is again 3 to 5 references from other healthcare providers. Okay. Agency fees, another polling question, Diane. I forgot I threw a bunch out here this time. Agency fees are okay, we'll close that one out. I'm hoping that one was relatively easy. Yeah, most of you got it right there. The cost to providers for collection agencies offset by the return on bad debt accounts. You would never waive, agencies would never waive any fees regardless of when they collect it. Many times, by the time you get it through early out, by the time you get it to primary bad debt, to the time you may get it to a second collection agency, you could be greater than a year, particularly from date of service if you had insurance billing in there as well. So an agency is not going to collect money and not get paid for it. And it should never be reported just annually to the provider. Again, you should have monthly reporting that identifies everything that was paid, collectability, close and return reports, et cetera, that really shows performance and activity of the agency. Great. Oh, which is next one. Sorry. Which option? Another polling question. Get Diane on her toes today. Which option is not an HFMA best practice? And HFMA best practice supports how providers should deal with self-pay debt and billing. Okay, then we'll close that one out. Move on. Correct. Coordinate the resolution of bad debt accounts with the law firm. That you absolutely can use law firms for going after bad debt and taking legal action against patients to resolve the debt as well. But that is not addressed in the HFMA best practices. They definitely, that is not an HFMA best practice. All of the others are. Okay. And you should always report back to credit bureaus when resolved. All right, moving on. Last section for today, and one more last section of review before we move on to our assessments next week. So we're going to talk about the need for outsourcing within a healthcare organization, the advantages and disadvantages of outsourcing, and then identify the clauses that should be included within outsourcing contract. Okay. Outsourcing within the area of accounts receivable involves using outside resources to manage all or specific sections of the AR functions. There are vendors who, for a fixed fee, assume responsibility for aspects of AR up to and not including appointment scheduling, registration, charge posting, billing, second billing follow-up, assignment to collection agencies, or additional follow-up. Almost any function within the revenue cycle may be a candidate for outsourcing. There are many companies out there, Parallon, Optum 360, to name just two, that completely take over revenue cycle functions for healthcare providers from the start of the business to the end of the business and everything in between. And they literally, many of them will actually rebadge current healthcare provider organizations become part of the organization. So it is not uncommon for providers to say, I don't want to be in the business of revenue cycle at all, and completely outsource every function that's part of that. If you go back to section unit 1, where we talk about pre-service, time of service, and post-service, they'll completely outsource all of that, including HIM and coding. A call center vendor may be used to handle scheduling or pre-reg activities. Technology will be needed to effectively manage a call center to ensure low wait times and maximum utilization of resources. The last thing you want to do is have your patients or your physicians, referring physicians particularly, waiting extraordinarily amount of times just to schedule a visit. Using automated dialers and randomized scheduling for self-pay accounts, a call center can increase productivity and collections. They have the ability to make calls during appropriate evening and weekend hours when most providers don't staff effectively. So the advantage of outsourcing, particularly if you find it very difficult to find qualified staff within your area, in your community, in any of those areas, is a very good reason why vendors are in play today. As we mentioned before in the use of collection agencies, that access to the technology, the ability to get advanced propensity to pay scores, to really use that to go self-pay follow-up processes, the use of dialers, the use of blast messaging. All of that is technology that providers may not be able to invest in because their money needs to, and appropriately, go to clinical care. The vendor will absorb some of that financial risk. Obviously, they're going to, although they'll get contingency fees and we're presuming it's going to cover their cost, they do absorb some of that financial risk. There may not be, they may spend time and money on going after the patient and get absolutely nothing for return. So, and then their economies of scale then can help keep those costs down. We may not be available to individual providers, such as they may be able to handle AR in a central location for a number of group versus being decentralized. Certainly disadvantages, you lose some control over your AR. Again, you should be managing any of your vendors very appropriately with appropriate reporting that is very clear and transparent, but you do lose some direct control over your AR and your relationship with possibly your patients. It can impact patient relations, making again sure that you're using the right vendor for your community with the right approach absolutely can impact negatively if those calls are not being made in the right tone. Increased cost to you if the vendor is not effective, right? If I use a primary vendor and they're not effective at all, typically my secondary vendor is going to cost me a lot more money in a contingency phase. So each early out is going to be one rate, bad debt's going to be another rate, and your second placement is going to be a third rate. And the longer more aged it is, that contingency fee is higher because like the collectability is less. So if you've got an ineffective early out vendor, you're going to be paying more contingency fee if it goes to bad debt because they couldn't collect because they were not doing their job. And then certainly legal considerations if vendor staff do not identify themselves as vendors. So if they, as a bad debt vendor, tries to go and say that they work for XYZ provider, that could have some significant impact on legal considerations. So outsourcing considerations for everything that you do, you should be initiating an RFP. It should be sent requesting specific responses to providers' need and the vendor capabilities. Prospective outsourcing vendors should be required to demonstrate their expertise and their ability to handle the processes to outsource. Providers can and should be encouraged to participate in on-site visits at their offices, and maybe not now, right, but someday, hopefully, and detailed reference checking. Talk with the vendor's employees, particularly supervisory and management staff, to determine their level of experience and competency. Reach out to current and past vendor clients and discuss their performance. And choose a vendor with successful track record and history of efficient AR management. Not because they're a nice person and you enjoy hanging out with them. That's not the reason to hire a vendor. Okay. Contract clauses. In every contract that you have with any vendor, they should contain specific clauses. Clear understanding that the provider retains ownership of any outsourced activities unless specifically sold in the vendor contract. Now, there are vendors out there that will actually buy bad debt accounts. A lot of providers, particularly not-for-profit providers, specifically exclude that or disallow that in their bylaws. But certainly other companies have the capability to sell bad debt. Once you sell your bad debt, you no longer own control over it. So you have to keep that into consideration. The procedures and protocols for the outsourced services and activities to ensure segregation of outsourced and insourced responsibilities. What are you going to own? What are they going to own? A trial period possibly of 3 to 6 months from the initial outsource date to allow resolution of unexpected problems. Certainly that you should have renewal and cancellation clause and term clauses in there for cause. Specific language as to who will pay the cost of legal action if needed. Are they going to cover it? Are you covering those legal costs? Will those get billed back to you in addition to the contingency fee? That is your normal scenario where if they take legal action, they will charge you for those legal costs in addition to any collections that they recovered. The specific statements of what areas of responsibility will be outsourced, including specific job descriptions if individual jobs are to be outsourced. The frequency and type of reports, again, we talked about before. And then a statement of how the vendor is expected to protect the confidentiality of all information that comes into its system, because clearly it is definitely PHI and is going to be covered under HIPAA regulations. So key points, outsourcing is absolutely very, very common in healthcare revenue cycle, but you really need to take care and really consider your options and the vendors that you choose to partner with. And it should be a partnership, not just a business transaction. So make sure you're choosing it based on the reputation and your community needs and how you want them to be dealing with your patients appropriately. Okay. All right. Which option? Oh, no, I think Diane, which function with the revenue cycle is not a good candidate for outsourcing? I think we might have done this one twice. I think we did this on the previous slide. Which option is not an HFMA best practice? That was to coordinate the resolution of bad debt accounts with the law firm. Diane, do we have another polling question? Might have messed up on that one.
No, I don't see another one.
Okay. All right. Okay, so we'll just walk through this. Which function with the revenue cycle is not a good candidate for outsourcing? Right. So as we mentioned before, the answer here is healthcare patient services. HIM is quite often outsourced. There's components of it are outsourced. Patient access can absolutely be outsourced, as we talked about, vendors like Parallon and or Optum 360 take over a lot of that revenue cycle, or maybe they'll just outsource certain call centers for pre-registration or scheduling. Certainly a lot of patient accounting is outsourced a great deal. Providers will use vendors for aged AR follow-up and some billing aspects of it. Some of them just completely outsource the entire billing back end. And others will use them just for, say, self-pay vendors, etc. And healthcare patient services, that's really clinical care. That is one, not a revenue cycle function, and is certainly not a good candidate for fully outsourcing all of your clinical staff. Now, many of your providers, you might see that they do use vendors. They'll use companies that provide temp work to cover some of their nursing staff, particularly in this day and age. But that's not really considered outsourcing. I don't think I've ever seen an entire hospital be outsourced to an outside vendor to provide clinical care. It is way too important to the hospital moving forward. Okay, sorry about that, guys. A little technical difficulties today, at least on my side. So sorry about that, Diane. Okay, all right. So we've gone through all 4 sections of the assessment and the e-learning. So again, if you've not done so already, and I really hope you did, get into that e-learning, walk through those sections. When you go through the questions, it'll tell you why the answers are right, why they're not right. If you do that, possibly listen to some of these. If you missed any of these meetings, sessions, please go out to the Florida YouTube channel. All 8 of them will be up there online. So go through, use them. You may not want to listen to me again, but I think hopefully it'll help you pass it. You will have 90 minutes to complete the exam. It'll be more than enough time if you take it. I actually took the exam this week and I got it done and passed within 30 minutes. Now I've been living this obviously for the last 2 months, but I encourage you, if you do all the things we've talked about, invest in some time to go through the materials the day before the exam. Once you start it, you cannot stop it. So you click on start, you've got to go there. You have passing score is 70. I feel comfortable that you'll all do it if you spend the time. If you do not pass it, you can retake after 30 days. You can flag questions for review. And obviously there's a confidentiality agreement that you'll have to sign that you cannot share with anybody else what types of questions were on the exam. We will, not next week. I don't think anybody wants to spend Thanksgiving with me. But in 2 weeks, we'll do a final review. That'll include us just going through some polling questions and walking through them and going through and confirming some of the stuff, some ones we've already done and some new ones as well. So hopefully you'll join us for that in 2 weeks, and then hopefully you're ready to take that exam. And I look forward to seeing a lot of CR people certified, hopefully in the month of December. So Anthony, any questions?
No questions so far. Everyone, please feel free to enter your questions in the chat box, and we will get those, or any section that you'd like us to touch on a little bit more or recap. Who sets the test up? Asks Misa.
That is all HFMA. They go through a random pool of questions. And so they've got probably a build of 150 to 200 tests, exams. I actually participated in a review of questions a few years ago, where they'll bring in people that are engaged in HFMA, have had prior experience in certification, and based on the materials, we'll start creating those questions. So it's a random pool of about 150 to 200 questions that they'll just pull based on those 75. Okay.
So the next question, I answered for Juan about the slides, and the YouTube channel recording will be on YouTube, and the slides will be available on our website via PDF. And then Jay Willis Simmons asked, once we take the exam, how quickly to receive our score? And that answer is instantaneously.
Instantaneously.
Yeah. As soon as you finish the exam, it'll process your score and let you know right away.
Yep. Yeah. And you'll have plenty of time to take it. Again, if you have a question you're not certain of, flag it for review. At the end, you can go in and just look at flagged questions and just walk through them one more time and just go through it. So answer your questions as you can, but I think you'll 90 minutes is more than enough time to get through this exam, guys. Other questions, Anthony?
Yes, so will the test remain free, or will there eventually be a cost in the future? I think you have what, how long, don't you have a year to take it, Christine?
You have a year from the time you sign on. As far as we know, if you are an HFMA member, the test will continue to be free as part of your membership, whether you're a individual membership or an enterprise client membership. So I don't see that HFMA will go back to charging for exams. And then you do have 30 days. If you do not pass it, you can retake it after 30 days. And if I take it again and I still don't pass it again, I have to wait another 30 days. But you have about a year to take the exam. And then you can, HFMA National, we had quite a few people on this call that had signed up for it, never completed it, and they had expired. And HFMA is very good about going in and changing your expiration date at no cost to you. So
all right, we've got a couple more here, and Diane, you might have to help on this one if you don't mind. So Juan is saying that he went to download the PDF from the website of these slides. He says that not all the slides, he's saying he's not seeing all the slides that he's seen in this presentation. Diane, can you clear that up, or can you tell quickly on where exactly those are so the folks can get those?
I'll have to, I was actually logging in right now to double check and see. Though the slides that are on the website were posted really, really early on. So I may need to get with Christine and update the file that's on there.
Okay, I hope that answers your guys' question, everyone. That yeah, she's going to go through it. So keep an eye on that website. And hopefully by the next time we come together, we'll give you an update on all these slides. Jeanette, so the date of the test is really up to you. And when you trigger the exam there's no set dates for the exam. It's really whenever you're ready and you click go, you can do it at your convenience.
yeah.
We're in the slide. Yeah, another question about the slides, Diane. So we'll get back with everybody next week.
Diane,
or not next week.
Diane, did you post this session yet? Keep in mind that maybe last week's session that they're looking at. Both slides will look the same. There's going to always be 2 from each section. So there'll be 2 unit 1s, 2 unit 2s, 2 unit 3s, 2 unit 4s. So I'm not sure if they're maybe looking at the first unit 4, which was last week's slide back.
So the one that's posted online, there's a total of 82 pages.
Yeah, this one's only 70, 80, 81. Yeah, I don't know. Well, I'll get with you, Diane. Just reach out to me and we'll make sure you got the right one. Okay. Any other questions, Anthony?
I think yes, you'll get a certificate right away that you'll be able to print, and they will also mail you a package to the address listed on your HFMA membership, if I remember correctly.
Yep, and you'll get a digital badge that if you're like a member of LinkedIn and stuff that you can put in. I think about 2 weeks later to get a digital badge you can put on your LinkedIn profile.
All right, I think that's it. Great,
guys. All right, well, happy learning. Enjoy your Thanksgiving next week. I know you're going to miss me and Anthony. And we'll talk to you in 2 weeks. Enjoy your holidays, guys.